Hey everyone, Hunter Satterfield here, a partner at CWA and a member of our investment committee, and this is your January market update. As always, I am joined by my fellow partner here at CWA and the head of our investment committee, Brian Bortz. Thanks, Brian, for being with us, and Brad Sanders, the managing director of Tectonic Advisors as well. For the month of January, the S&P 500 was down right around 1%, representing domestic equities. Global stocks were down 0.2%, and then domestic bonds were down 0.7%, with global bonds down right around 0.9%. Now, if you have questions about why I just read out all of those things that were down, yet the market sentiment and what you're reading on the headlines is focused in on a handful of stocks that may be rising up very quickly, for instance, like a GameStop or an AMC. Brad and I recorded a webinar last week that covers much of that, but we are going to discuss a little bit of that today as well, because certainly what we have heard in the market over the past month does not necessarily echo those returns that we just showed on the screen. So Brad, let me come over to you first to sort of talk a little bit more and flesh out a little bit more what we talked about on our webinar on that. So why is it, what is going on with those individual stocks and creating the mania there versus what we're seeing in the broader market?
Yeah, what we're seeing in those handful of stocks, I think it's very important for everybody to realize that it's nothing new. The last time we saw this was maybe 10 years or so ago, and it was Volkswagen. I don't know if anybody remembers that. Volkswagen was heavily shorted, and then all of a sudden everybody piled on, and it became the largest automaker in the United States, or in the world from a market cap standpoint, like overnight. So that's just noise. What we're seeing is just a market we're 12 years into a bull market run, maybe even a little longer than that. And once you get late in market cycles like this, you start to have people start to look for a reason for the market to go down. And it's a psychological thing we do because we have this fear of the downside of the market, and we try to talk ourselves into it, and we try to scare ourselves out of it. It's kind of a mental thing that we do to ourselves. And so I think that's what all this is playing into. Is you see something like what happened in GameStop, you start to freak out a little bit. You're like, what the heck is that? That's a symptom of the market being broken. And where in reality, that's something that happens all the time, year to year. It's something that you can see quite frequently if you're paying attention. This one just happened to hit everybody's soft points because it was social media and it was all over the news, and it's right post-election. It's right at the beginning of the year, and everybody's scared of this market and kind of hates this bull market. All this noise just kind of makes me think the market's probably going to continue to go up because, as you know, Hunter, when you study behavioral finance, the herd very rarely gets it right. And all this noise about the market being topping out makes me think that we might have a good 2021.
Yeah, no, that's great. And I think that you had said previously that it's not necessarily symptomatic of anything specific. It's just a part of market cycles and how things work like that. And I think it's great. And Brian, let me kind of come over to you, because from a we're both, you and I are both directly involved with answering questions of clients, and I know you've gotten a lot of the same ones as me, which is sort of searching post inauguration. A new administration. We've got vaccinations, but we still have cases. We have all of these things that are sort of filtering through the market, and then kind of what Brad talked about with GameStop as well. So what do you tell a client when something like this is going on, as far as what to focus on?
Yeah, Hunter, first of all, thanks for having me again. And the volume of calls is ever increasing at the moment. And I think clients are really worried about 23 things. but should we worry about the election? Should we worry about fiscal stimulus? Should we worry about cryptocurrency? Should we worry about GameStop? You mentioned, let's don't forget, there's still the global pandemic going on. And all of those items are stress points for the client. And one of the things that I always try to reemphasize to my client is that, first of all, take a step back and remember that we have a long-term focus and a long-term plan, and long-term investing reduces volatility. So if you're worried about short-term events, what that really equates to is emotion. And if you're starting to get emotional about your money, you're much more likely to make poor decisions from a planning perspective. So really, it's trying to reemphasize that long-term focus that reduces the volatility and smooths out some of these bumps in the road that Brad was talking about that are very common and very normal at this stage in the economy.
Yeah, great way to kind of sum up what we should be focusing on for the year, certainly. And again, just to kind of mention it again, that if you've got specific questions, viewers, about what happened with GameStop and what does it mean and what was going on, please refer back to that webinar that's also on our landing page that you can view as well. And beyond that, we'll be back in front of you next month at the end of February with an update on February. Thank you so much.